Hi everybody, welcome to another update on the gold forecast index, the holy grail to predicting gold prices. Gold is doing very well. Last month I said gold should be going up, and it has gone up from 2,400 to 2,500. That's a pretty big rise. That's $100. So what will gold do next month? There's only one way to know, and that's using the gold forecast index. So this is the gold forecast index chart using leading indicators for the gold price. And our latest data point says a massive rise is coming in gold. So yeah, this is a pretty big rise. It's massively in the positive now. So gold is going to break out. It's looking very good. Probably going to 3,000. So this is a leading indicator, and probably 2 months from now, this will go much higher. Taylor roll rate is still weak. This needs to go up. But that will come because when they cut rates, then this here will, here the Fed funds rate here will go down, and then this thing will go up. So the blue chart is expected to go up and gold will rise. Misery index, I expect that unemployment will go up. Inflation has been a bit subdued, but that will probably also start rising with the rate cuts. So this chart goes up, misery goes up, and gold will rise as well. Real output, yeah, this is still, economy is still very productive. That's Q2, but we will see. Gold demand, yeah, we have seen a lot of ETF flows into gold lately, so that's a good sign. GLD is also picking up. There's still a long way to go as far as tons. Still need to go to these peaks here. As this goes up, the gold price will go up much more. COMEX still in a decline, but yeah, waiting for a bottom. LBMA, same, bottoming out, going up. So gold will probably start rising again. Gold demand in China and India are declining. So it's mostly the West now that is buying gold. The Chinese have already bought it, so they don't need to buy it anymore that much. But let's see how this evolves. Same with silver, not a lot of interest, not a lot of imports. However, Chinese gold imports are pretty stable. Silver imports actually moving up. So looking great. Silver ETF demand is also picking up. So that should be good. SLV, PSLV also picking up. The tonnage is rising. Even PSLV is rising. So both gold and silver will be going up. What's this? COMEX silver also rising. That's good. Okay, this is an important chart. So this is central bank gold demand, and it has actually, you can see it, it's in the positive. So they have bought a lot of gold between 2022, 2024, and it's picking up again. So ETF selling, in this period there was ETF selling, but the central banks were buying, and that has driven up the gold price. A lot of gold still to be bought by the central banks, so this needs to go up a lot more. So coming years, we are going to see new all-time highs for gold. So this is gold reserves going up. of the central banks. Okay. And then we go to China. The numbers are going to come out maybe this week. Let's see if China starts buying again. So we should see July numbers soon. US Mint sales are pretty weak, but yeah, this is just coin sales. Retail has no money left to buy, but we still have the central banks and the ETFs that are going up. Premiums, you can see it, are pretty low. Nobody has money to buy. Junk silver premiums up a bit, but still very low. Yeah, not a lot of interest from retail. China, this is clear. This is a clear signal that the Chinese are not buying that much anymore. They were buying a lot here. Now it's neutral. So it's not bearish. It's just neutral at zero. The buying needs to come from somewhere else now, from central banks and ETFs. For silver, it's better. Chinese still like the silver. Upmex gold premiums still low, but not at all-time lows. COT report, this is interesting to look at the open interest. It's rising slowly. So this was a peak. We could still peak higher in the coming years. Tips, also interesting to see, this is a bottom. And as this goes back up, gold will rise, same with real yields, bottoming out, and then yields will go negative again, and then gold goes up. Seasonality, I have seen a lot of posts about September being a bad month for gold, but why is this then going up? So here it says September is a good month for gold. Same here, September is a good month for gold. So I think gold is going to go up. And silver as well. Okay, technicals, bullish percent index is interesting to look at. Should we buy gold miners or not? Okay, so we are slightly bearish. So that means that there's potential to go higher. So yeah, gold miners are probably bottoming out. Currency in circulation, still this gap to be filled. That's 3,000, 4,000 gold coming. So yeah, long term, it's looking very good for gold. This is the 30 to 10 year. It's in a rising trend. Okay, that's good for gold. And there's a long way to go higher. Yeah, so new all-time highs coming. Yeah, I'm sure that there are a lot of people looking at how to buy gold. Debt is still rising, hitting all-time highs. GDP is weak, also good for gold. Defense spending still going on, good for gold. Near-term forward spread. Let's see. This is one of the most important indicators you need to watch. This tells you in which cycle you are. A rate cutting cycle or a rate hiking cycle. That's a big difference. So 30 August, and we are at minus 1.54. So this looks very bullish for gold. As this moves up, then gold always goes up. So I have not seen any negative point for gold yet. Let's see how we are doing. Proxy Fed funds rate. This tells us if there are going to be rate cuts. Yeah, it's flattish. I want to see this breakdown. And then we could see rate cuts, and the 2-year yield is breaking down. So this tells me that rate cuts are imminent. I want to see this go down even more with bad economic data. That would be bullish gold. This is interesting. This is the gold deposits of foreign central banks, and it has gone up again. So it was flat for several months, and now it went back up in July. If this trend continues, that means that central banks will be buying gold. They buy gold and then they deposit it at the Federal Bank of New York. Bank term funding is almost to an end, so that needs to come off. Bad for the banking sector. You are going to see bank runs. Let's see if they still have cash. Cash is going down. Mostly the large banks. Lease rates also very bullish. They are coming down, and that typically says gold will go up. If I get, okay. So which chart do we look at? Yeah, that's September the 3rd. Okay, so here you can clearly see this trend is down, and this typically says that gold is going up. Here we had the peak in gold. So here you had to sell gold, here you need to buy. So looking good. Gold futures curve also looking good. Gold is pointing to 3,000 in the future. So overall, looks pretty good for gold to go higher. Money supply is also starting to rise, as you can see here. Good for gold. Actually, I want to check in the copper as well, because I'm bearish copper. Okay, global real economic activity is pretty weak. It's not soaring. Copper gold ratio will probably go down. That's good for gold. Here you can see copper inventories keep rising. That's bearish copper. Inventories rising. Normally they should be going down by now, but it's still rising. So that's bearish for copper. Okay, so China inventories did go down, but still elevated. Power consumption is actually all-time highs. Yeah, this is the most important chart. You see that the China credit impulse is going negative, minus 20%. Big drop in lending. So copper is probably going to go below 4. Shanghai Composite Index is cratering. It's going lower. That's not good for commodities. Oil, copper, avoid those for now. Yeah, not a lot of imports of copper in China. Yeah, daily forecast is a bit on the high side, so that could drop as well. Inflation is actually starting to drop a bit. You can see the trend is down. So silver will be underperforming gold. That's what I think. And this one. This is a new data point. The Brave Butters Kelly leading index of 490 macro indicators leading is dropping. So the red line is dropping. I'm going to expect that the economy will roll over in a few months from now, by the end of the year. And that will be good for gold. Yeah, Hong Kong housing market is just making new lows. Holiday season is over, so oil will probably also go down from that. Yeah, it is not looking good for oil and copper. Oil down 1%, and gold is actually green now. So extremely bullish gold and bearish oil and copper. Okay, on to central bank balance sheets. They are still in QT mode, but it's flattening out. So they are going to start QE again very soon. This is a weird chart. Okay, so that's central banks. This is about the stock market. Let's see if the credit spreads are blowing out. Not yet, still at highs. Um, okay, this is the credit spread. This is interesting. This is something I did not expect. Credit spreads are actually shrinking instead of widening, which is actually bullish for stocks. Yeah, GDP is not cratering. Maybe a recession could be avoided for now. If there were a recession, you should see this go down, like here. This should actually go down. It isn't going down, so I think stock market can hold on for a bit. On to deficits. Yeah, deficits have increased. The latest data points. Yeah, this is not looking good for the US. Deficits have increased, both for services and goods. Yeah, the red line is looking very bad. And you can see that here as well. It's going down. That's bad for the dollar and good for gold. Import prices up, export prices flat. That's creating a deficit. Yeah, same here. This is still old data. Yeah, you can clearly see here, this is the US dollar with deficits. Deficits increasing, this should be bearish for the dollar. Yeah, so this is probably a top in the dollar and that will be bullish for gold. Capacity utilization gives us a signal on inflation. It has gone down a bit. So less inflation, more in the deflation camp. So avoid silver, go into gold. Wanted to look a bit at employment data. We got JOLTS openings today and they were very bad. So that's this year. It's trending down. So unemployment rate, I expect this to keep on rising to 6%, and that would boost gold higher. So overall, I still like gold. Commodity forecast, I wanted to go over some of them. Brent oil going lower in the coming years, so avoid oil. This is coal, also going lower in the coming years. This is wheat doing nothing, will follow oil. Then we have tin. Yeah, tin. Apparently, people think that tin is going higher due to NVIDIA and all of that. Palm oil is looking bad, will follow oil down. And copper seems to, people seem to think that it will go up. I'm actually neutral to bearish on copper. So I'm still avoiding that sector. Lumber falling while gold goes up. So this tells us economy is not doing that great. So here is the path of rate cuts. So the 3-month, it was like this in April, and now it's going to be a lot of cuts. This is extremely bullish gold. So this is actually the near-term forward spread, the 3-month. So in a year from now, they need to cut the rates, and that will boost gold. Yeah, Libya, we have heard a lot of Libya things, that they are going to close it and then reopen it. This is just noise to me. Overall, I think oil is very weak. Demand is going not up as much, but the supply is. This is a new chart that I created a week ago. Actually, a pretty important chart, and I'm going to keep on updating this chart. It tells you the amount of states in the United States where the unemployment rate goes up month over month. So that's the blue line. And here you can see there are around 30 to 40 states where the unemployment rate went up month over month. Okay. And you can see that this is a leading indicator. So the blue line is a leading indicator, and this is the moving average, the 1-year moving average, and it leads by 1 year. You can see that clearly. So if we follow this path higher, then the unemployment rate should reach 6% by next year. And this is a chart for the long term. So it actually works. The number of states with higher unemployment, and the unemployment rate follows this. So this is such a strong chart that you need to follow, because it just forecasts what the unemployment rate is going to be a year from now. So if it goes up, that means gold will go up because of the misery index, right? The misery index will go up and gold will follow. So important chart to follow up. Yep. Oil supply. You can see Iran is going to bring a lot of oil into the world. That is going to increase oil on water via tankers. That's ongoing, and you can see, for example, here, inventories of oil on water are down. And normally, if it goes down, then oil goes up. But lately, this has been going down, but oil has done nothing. It's not up. So this is pretty bearish. So normally, if it goes down, oil goes up. If it goes up, then oil goes down. Now Iran is going to bring a lot of oil online. So I expect this to rebound. More oil will go on water, and oil will start crashing to 60 to 50. So please avoid the oil sector. So, okay, this is also a nice chart. This is the gold-silver ratio with unemployment rate. We now know that unemployment is going to go to 6%, okay? It's all about making connections. This is going up, which means the gold-silver ratio will go up. Okay, you can see that clearly it's correlated. There are a lot of people saying that the gold-silver ratio will come down to 70, 60, and silver will will soar, but no, it's going the other way. As unemployment rises, gold-silver ratio will go to 100, silver will drop, and gold will go up. Okay, just look at the data. Okay, we already saw this chart, central banks buying gold. There is a spot update, and he bought IM Gold, Solaris Resources, Kinross, and Salt Seabridge, Triple Flag, Goldfields, Equinox. Just take a look at this and you will have some ideas. Gold is still at 1% of total global assets, so plenty of upside for gold. Population growth is correlated with gold. As population goes down, gold goes up. Why? Because then people will buy less things for the children. If you don't have children, you are going to invest more, and not in stocks because it's too high, and bonds doesn't give a lot of return, so they could buy gold. Okay, so that's why if population goes down, they will buy more gold. And also, if you have less people in the world, so less people will go working, and the debt will keep on rising. Debt per person, debt per capita will rise, and a lot of money printing will need to happen to pay off the interest on the debt. So gold will keep on rising. And that's a new trend here. The population is going down in China. So those people will be buying gold. Yeah, higher debt to GDP will lead to higher gold. Labor force participation is indeed going lower with the declining population. So everything matches up with higher gold prices. The Gulf countries, so this here, are starting to get gold from the Swiss gold exports. So that's important. They are starting to use gold for transactions, right? So why the Gulf countries? They have deals with Russia probably. They're using gold because the ruble is not going to be used anymore. So yeah, this tells me there is a shift to using more gold as a currency. China selling US bonds and buying gold. You can see that here. China is selling US treasuries and buying more gold. This trend continues, which is indeed very bullish gold. There are a lot of bonds left to sell into gold. Another thing to keep on hammering on gold is money, because it has a very high stock to flow ratio. So the stock is around 60,000 metric tons, okay? And that corresponds with 65 years of stock. So it doesn't matter if we shut down the gold mines, because there's still a lot of stock left. And gold mines are typically only 2% of the stock, of the year's stock. So people say all-in sustaining costs is moving the gold price. That's completely untrue. It's the other way around. It's the gold price that moves the all-in sustaining cost. So as gold goes higher, as gold moves higher to 3,000, 4,000, then the all-in sustaining cost of gold miners will go to 3,000, 4,000. Why? Because they will open up lower grade mines. They will start producing more lower grade gold, and that will automatically push up the all-in sustaining cost. If gold drops to 1,000, they will start shutting down the mines, and only the high grade mines will be left over, like so which are the high grade, the Skeena resources maybe will be left over. You have the Agnico Eagles with low costs that will be left over. Things like Artemis Gold will be left over. So if gold drops, a lot of mines will close, and then the all-in sustaining cost will come down. So important to know this basic concept about gold stock to flow ratio. Gold is money, it's not a commodity. Gold demand was strong for ETFs and central banks. So central banks still buying gold. Yeah, this is the central bank's data. The gray bar is rising. Gold ETFs, the same, are rising. So here it was low, gold going down, here as well, gold going down. Here ETFs were in the negative, gold actually not going down because central banks were buying here. You know, 2022 to 2024, central banks were actually buying gold, so gold went up while ETF demand was negative. Now the ETFs are coming back together with central banks. So both central banks and ETFs are buying gold. And that will push gold to new all-time highs. Rise of the gold mines. So how to benefit from this? We know oil is going down. So costs coming down during the depression. Gold going up. So the gold miners are going to have incredible margins. And you can see Homestake mining had gone up 600%, 600, 800%, and I expect this to happen again when gold goes to 3,000 and oil keeps on dropping to $50, and it's already happening. Gold up and oil down. So we stay in the gold miners. You can choose yourself which ones to buy. And that was the conclusion for this month. Gold will be going higher and just avoid everything else. And I'll see you next month. Bye.